Hey everyone, I've received multiple messages to make a video on Polyplex. So after growing 9 times between March 20 to April 22, Polyplex share price has tanked 68% so far. The question is what went wrong? Hence, I thought of quickly sharing my viewpoint. Moreover, there are also concerns around 100% pledging of Polyplex share. So I'll discuss that as well. Okay, the culprit here is brutal correction in the entire sector Polyplex operates in. Plastic film packaging is a highly cyclical sector with prices dependent upon supply and demand. If the demand is high and supply is low, prices jump and it increases companies' margin and earning. But if the demand is low and supply is high, prices fall, impacting companies' margin and earning significantly. Now, during March 20 to April 22, there was high demand and low supply for plastic film packaging. Hence, the entire sector zoomed exponentially. It was clearly visible from companies' operating margin that zoomed from 17% in FY20 to 25% in FY21. However, it's been 2 years since the entire sector is struggling. You can see that Polyplex margins have fallen from 25% to 5%. And not just Polyplex, but all the stocks in the sector are down significantly, including Cosmo First, Uflex, Jindal Poly. The key question is, when will this pain get over? So currently there is no clear visibility, at least for the next few months. It looks like the pain might last for another 6 months to 1 year. And that is the reason there is selling pressure on Polyplex and share is still falling. Now last time, this situation occurred during FY12 to 14 period and Polyplex share price tanked 76% for nearly 3 years between November 10 to August 13. If we extrapolate the similar situation, it's been already 2 years since Polyplex share is falling. But Polyplex may continue to see more pressure for the next few months. Since it has already fallen around 68% from its peak, if we take a similar correction, Polyplex may fall to let's say 700 to 750 rupee over the next few months. It means another 15-20% correction possible from current levels. However, the cycle would eventually turn around. And last time when the cycle turned around, Polyplex zoomed 25 times from the bottom in August 13 till April 22. So the bottom line is that Polyplex may continue to face selling pressure for next few months or quarters until the demand supply situation improves. Personally, it's a big learning for me as well. The learning is to try to avoid such deeply cyclical stocks. I mean, if you can invest during the upcycle, then sky is the limit. But you need to time the exit in such deeply cyclical stocks before the down cycle starts, which is not easy for retail investors. I've already explained it in the video I did last year on Polyplex. The most interesting part is that last year Polyplex promoter sold 24.2% stake to a Dubai-based company AGP Holdco for 1,379 crore rupees. So first of all, if you are wondering why promoters have sold such high stake, then the reason is Polyplex founder is Mr. Sanjeev Saraf. He's an IIT Kharagpur alumni, and the reason he sold stake is because he's already 65-year-old and there's no one from the next generation to lead the business. So this stake sale is a part of succession planning for Polyplex. Now, AGP Holdco purchased 24.2% stake in Polyplex at a valuation of 5,690 crore rupees. And today, Polyplex is trading at around 2,700 crore. That's nearly half the price AGP Holdco paid to buy stake in Polyplex. I assume that AGP Holdco team had done a good analysis and identifying the true value of the company before investing such a significant amount. And currently, the valuations are almost half of what they paid. So that gives a good comfort. Having said this, Polyplex may test the patience of retail investors for some more time. So it's tricky. If you have invested at higher levels and sitting on big loss, may be worth waiting for turnaround because eventually that will happen. If not in next few months, then certainly in the next few quarters. It's a cyclical sector and the situation would become favorable at one point in time. Unfortunately, that time might not be now, but it will happen sooner or later. At the same time, if you find a better opportunity where the stock can jump in the near term, there's no harm in booking loss and grabbing that opportunity. So at current levels, I think that the risk-reward ratio is in favor of Polyplex, but only if you have a slightly longer investment horizon of at least 3 years. If your investment horizon is less than 1 year, it's probably not worth investing in Polyplex as there can be more selling pressure. I hope you got a fair idea of why Polyplex share price is correcting. The simple reason is that it is a deeply cyclical sector and currently going through a tough phase. Now, I was going through the shareholding pattern and found that Dolly Khanna has played the cycle very well. She entered during the upcycle, kept on increasing stake and started reducing the shareholding at the peak. So either she understood the cycle very well or she had some insider information. Now another concern is on promoter pledging. It shows 100% promoter pledge. However, promoter pledging is not illegal. The question is the intention, why promoters have pledged the share. So I read that this pledging is part of an agreement between Sanjeev Saraf, who is the founder of the company, and AGP Holdco. The pledge is that he will not sell his stake without approval of AGP. So this is not a financial pledge. Hence, you should not consider this as a big issue. Moreover, company has a latest short-term borrowing of 383 crore and company is sitting on cash worth 935 crore. So company's financials are solid. There is no financial trouble. I also read that after the stake purchase, AGP Holdco would have a new CEO for Polyplex. That can be a good news with new management. In fact, Polyplex can also leverage the distribution network of AGP. Fundamentally, I still feel that Polyplex is a good company. It's just that it is in a sector that is highly cyclical. I think that the worst has already been priced in, but yeah, there can be more 15-20% correction here and there over the next few months. Having said this, Polyplex today is trading at a price to sale of 0.3. So company did a sale of around 6,000 crore in trailing 12 months and today it is trading at a market cap of 2,700 crore, which is looking very attractive. Another 10-15 correction would make the share price even more attractive. Anyways, let's see when the cycle turn around. And I hope eventually when the cycle turn around, Polyplex again rise to its glory. But for now, it's a pain if you are holding it in portfolio. Overall, I think that the worst is already priced in. Having said this, I don't see any immediate sign of recovery. Let's see what happens with the company in coming quarters. I just want to close this video by repeating that fundamentally there is no problem with Polyplex. In fact, it is the most efficient and well-run company in the plastic film packaging sector. It's just that the entire sector is highly cyclical that depends upon supply and demand, which is not in company's hand. As a retail investor, going forward, the learning is to avoid such deeply cyclical stocks. Having said this, if you're sitting on big loss and waited for so long, maybe worth waiting for a few months or quarter for the upcycle. I know it's not easy to keep patience. So another option is that if you find a better opportunity, then you can switch to it. So it's your call. But I hope you will appreciate the fact that I don't just discuss stock that goes up. I also cover stocks that fall. At the end of the day, my focus is on fundamentally strong companies. By the way, I'm also going through the latest updates on chemical sector and soon I would be reviewing promising chemical companies worth considering after more than 2 years of correction and consolidation. So stay tuned. Thanks for watching this video. I'll see you next video. Till then, take care.